Attention home sellers in the Denver metro area. Big money has made some decisions that signal that we may be seeing some interest rate drops in the near future, which would in turn help real estate prices rise. So if you want to see what I know and what I've been hearing about and how it might affect your home price, watch the end of this video.
I just may give you the lower interest rates this real estate market so desperately craves.
UWM is the largest mortgage lender in the United States. You may have heard of like Rocket Mortgage. They used to be the largest one, and UWM recently surpassed them. So the people that run UWM are big money, and they're more likely to be plugged in and maybe have some insider information that the rest of us don't have. And they're offering a promotion that just started last Thursday or so, and it runs through September 12th. And the promotion is, if you have a loan and you refinance it with them, then they're going to give you 0.9 basis points in credits to help you buy down the rate or pay for any costs associated with the refinance.
I'm giving 0.9% of a basis point in mortgage credits for everyone.
The reason I know about this is I have a mortgage lender who's really plugged into what's going on. His family's in banking, and he called me up and said, hey, you might want to think about using this there's a loan I have on an investment property. Quick side note, his name is Travis Weens, and I'd be more than happy to share his information if you have a loan that you'd like to refinance and take advantage of the 0.9 basis points in credits. So on that particular loan, because I get 0.9% basis of points in credit, it's a little over $10,000 that I get to buy the rate down. And if I were to move forward with that on this particular loan, instead of having a rate that was somewhere around 6.5, I'd be like 5.875. So my rate would have a 5 on it, not a 6, right? Why would UWM give loans out that are at such a low rate? Why would they eat that $9,000 in seller credit?
I am giving out thousands of dollars in seller credit because I have intel that says interest rates are going to come down.
What I think is going on is this promotion is going to push a lot of people off the fence to go refinance homes that they may have otherwise not refinanced so they could get a low rate. If you've bought a house anytime in the last couple of years, you could use this to get the rate down significantly, potentially saving $800, $900, $1,000 a month in your payments. So if they can get a bunch of people to do this, they can package together a bunch of these mortgages that are going to be at lower rates. And if, let's say, they knew in the near future there was going to be a big buyer out there that was going to be buying up a bunch of these loans at a lower rate,
I'm going to buy a bunch of mortgage-backed securities from UWM Man to drop mortgage rates.
Let's just hypothetically say the Fed was about to start using quantitative easing, which I'll explain in this video, but they're going to print up a bunch of money, use that money to buy mortgage-backed securities to artificially lower interest rates, right? If they were about to do that and they leaked that information to some people over at UWM, it would now be in UWM's best interest to front run that and get a bunch of mortgages together so that when there was a rate drop in interest rates, which would be probably from the Fed buying mortgage-backed securities, that after that happened, they were ready to sell. They had a big package of loans ready to go. Fed steps in, wants to buy them, they sell them, they make a good amount of money off of it, and the Fed's able to easily bring rates down. So that's what I think might be happening, and it's interesting that they're running this promotion up to September 12th, right before the next Fed rate hike meeting. I want to go into that next, right? We're going to go into what is quantitative easing, in case you don't know, and then also what is the Fed funds rate decisions, hikes, and how does that correlate to mortgage rates, right? Because just because the Fed's going to lower rates doesn't necessarily mean that mortgage rates are going to drop. So let's look at that quick.
What is quantitative easing, Eric? Is it evil?
So quantitative easing is just a really fancy word that just means money printing. Another tool the Fed has, right? They just make money out of nowhere, and then they use it in the financial markets to buy things or to short things. They can manipulate the market however they deem necessary with money that they create out of nowhere. And that's called quantitative easing. The Fed, yeah, they lower and raise rates, the Fed funds rate, but then they also just print up money and buy and sell things. So they can manipulate mortgage rates by buying mortgage-backed securities. What they do is artificially inflate the demand for those security instruments. And as the demand for mortgage-backed securities goes up, mortgage rates come down. All right, you often hear people talk about the Fed lowered rates or the Fed rose rates. And I think a lot of people think that is the same as mortgage rates going up and down. And it's not. It's not at all. And so I'm going to show you the chart of the Fed funds rate. That's the rate that everyone talks about, that the Fed raises and lowers. And then I'm going to show you a chart of the average 30-year mortgage interest rate. And you're about to see that they're completely uncorrelated, that these two numbers have nothing to do with each other. So first, here, this is a 30-year fixed mortgage rate. And we start at 6.73 1 year ago, August 1st, 2024. And then we fast forward to August 7th, 2025, and it's 6.63. So 0.1% lower over the course of the entire year. Now, if we move over to this spread chart, this shows the Fed funds rate. And August 2nd, it was at 5.3, and today it's at 4.3. So it's gone down 1 full percent. While at the same time, mortgage rates have only came down 0.1%. So not the same at all. I want to show you that here, half of this drop happened on September 19th, 2024. We went down to 4.83 on the Fed funds rate, and it stayed at 4.83 all the way to November 7th, 2024. So if we go back to the 30-year mortgage rate and look at it on September 19th, we're at 6.09. And if we fast forward to November, mid-November, we're at 6.78. So 0.69% higher in mortgage rates. While at that same time period, the Fed didn't change the Fed funds rate at all. So this number, it's not being moved by the Fed changing rates. So the Fed always talks about rate hikes, and you'll hear Trump talk about how the Fed needs to lower rates and all that. That's not going to help you with your 30-year mortgage rate going up or down. This rate goes up and down with the 10-year Treasury, and it is mainly a reflection of the market growth, and market inflation expectations. So if the market thinks that we have a lot of inflation coming and we're going to grow fast, then interest rates are going to go up. And if the market thinks that we're not going to grow fast, we're going to have a depression and we're not going to have inflation, then you're going to see this rate come down. So that's what's really moving the needle on this, with one exception. The government buys mortgage-backed securities with their QE program, and that manipulates this 30-year fixed mortgage rate. And so at any time, the Fed can just print up money that didn't exist before, and they can buy mortgage-backed securities, and they can make the average 30-year mortgage rate go down. So barring that, this is all based on rate and inflation expectations. So if you're a Denver area homeowner, what does this mean for you? It means that you probably shouldn't put your house on the market right now. If your house is not listed yet, this might be a good time to wait before you hit the market. It'd be better to hit the market after interest rates come down and buyer demand picks up. But it would be a good time to start on any renovations to get your house ready to hit the market. If this all unfolds the way I think it might, your house is ready to go, ready to put on the market, ready to get the best price. What we'll often do is renovate other people's houses with our money and our crews, and then we get paid back for the renovation at closing. Our renovation costs are much lower than the equity that we build in a house. For example, we can do new kitchen cabinets and quartz countertops in most houses for about $10K. And a lot of times that will increase the home value by $30,000 to $40,000. So that's a good renovation to do and make an extra $20,000 to $30,000 that you wouldn't otherwise have, letting us front the cost and use our crews. We do all the hard work, we pay all the money, we get it ready, then we list and sell the house for you. So you might want to consider those kind of improvements, getting those started now. But any way you look at it, you probably would not want to newly list a house and put it on the market now if you had any other options. If you'd like to sell your house, we'd love to give you an offer. We'd also like to show you what a fix and list deal would look like. That's when we renovate your house with our money and our crews. Just put in your address on our website. That's www.denverpropertyflip.com. Again, that's denverpropertyflip.com. Just go there, enter your address, and we'll get back to you with an offer on your house today.